brought to you by Ashton Mitchell at Premier Nationwide Lending, where dreams are defined. And by HomeMattersSC.com, building on what matters to you.
Hey guys, I am here today with Ashton Mitchell, better known as Home Loan Girl, here in Lexington. She is the Premier Nationwide Lending here in Lexington. Thank you for letting me invade your office today. I love it. It's the first time I've been here.
Absolutely. Yeah, it's a cute little, we have an 1890s house, made it nice and homey. And
yeah, I love it. Love it, love it. So let's talk about the mortgage rates and what they are today and where you think they maybe are heading. I know we don't have a crystal ball. Don't you wish we did?
I wish we did. If we did have a crystal ball, I would be in a different industry and much richer than I am now.
Amen to that.
So rates, what day is it? You know, that's kind of the thing is what day is it? What are they doing today? What are they doing by the hour? Because they change so frequently. Luckily, we had a nice little drop last week.
Yeah.
So most of the rates that I'm seeing for people that are not buying down the rates and points are floating right in between like 7.25 and 7.625 for most programs. Now, specialty programs, I've got some as low as 7% even right now.
Right. Which is not a bad rate if you think about, you know, the last 30-year average. And I know that's not what people want to hear, but it really is a pretty good rate. You know, I hope that we'll find it settling somewhere eventually around that 6, which would be our new norm. But again, no crystal ball.
Exactly. And that's my thought too. And that's kind of all the experts that I follow's thought is once we settle probably middle to end of next year, definitely into 2025, we're going to be looking somewhere in the low 6s, maybe even down to the 5s as our baseline.
Yeah. And so I don't know about you, but what do you tell buyers right now? Hey, I want to buy a house, but the rates.
Yeah.
So what do you say?
So the biggest thing right now with my buyers that I'm seeing is, one, if you can qualify right now, why are you continuing to wait?
Right.
And then if they can qualify right now, there's just some unique things that we're doing in the marketplace that's allowing them to save on that monthly payment. And I'm sure you've heard of this, but that 2-1 buy down.
Yeah.
Do you know much about that?
I've heard about it. Not a whole lot, but I mean, I have heard of it.
It's incredible. And what it is there's a 1-0 buy down that I can actually give as a lender credit. So that first year, say they lock in at a 7.5 rate. Their first year, they're going to have a 6.5 payment. So that's going to save them a few hundred right there, just off the bat. And then if we're able to get lucky and have a seller who's willing to give some concessions, that seller can pay for the 2-0 buy down. And what that means is for the first year, it's going to be 2% less. So if they lock in at 7.5, their first year payments are going to be 5.5. The second year, they would be 6.5. So that doesn't mean much as far as numbers when you're thinking buyers are like, oh, lower interest rate. But for instance, like say on a house just under $300,000, that's almost $400 a month in savings that first year. Yeah. So the goal is always, if you're using a 2-1 buy down, to refinance them before they ever hit year 3 payments.
Yeah, absolutely. And by then we should be at a better place.
Absolutely.
It may not be 5.5, but it won't be hopefully too far.
Exactly.
And so what do you say to the sellers about the concessions? I mean, what are you saying? Hey, let's work with our buyers here. Get your house sold.
What I've been doing a lot lately is trying to educate list agents. So you have sellers sitting with homes on the market and they're like, oh, it's time to do a price concession. No, don't do that price concession. If you're going to cut it $10,000, $15,000, how about talk to a lender, see what the cost of a 2-1 buy down is. And then instead of cutting the price, you can do that to incentivize more buyers. A lot of sellers are doing this to compete with new construction neighborhoods.
Yeah.
Because, you know, they're advertising those rates in the 5s and the 6s. This is the same thing. So you're incentivizing buyers to your home by saying, hey, you can get 2% lower the first year.
Yeah. Especially with particular lenders. Yes, that is true. And that's kind of what we've been saying, because the equity in the sellers' homes right now is at the top.
Definitely.
I mean, you've never had this much equity.
Yes.
And you may never again.
Yes.
But so I mean, and the only way to use that is to sell it. So And the buyers, I'm kind of the same way. I mean, if you're waiting for the interest rates to go back down, so is everybody else.
Yes,
and
they are.
now we're going to go back to everybody competing and paying more than what the list price is, and maybe not quite as crazy as it was.
Right.
Lord, I hope not. But
it will be crazy.
But it will be crazy. And, you know, it will be no more, hey, can we see this on Saturday, kind of like we are right now, what we call a normal showing world. It'd be like, you need to get off work right now. I'm sorry.
Yeah.
This will be gone.
Or you're going to miss it.
It'll be gone by the afternoon. So we don't, you know, we hope that we, for the buyer's sake, at least, sellers thought it was great.
Yes.
And as listing agent, it's great. But at the same time, it's not fair to the buyers. And I always said that really wasn't fair. And I don't want it to be that way again. I think fair on both sides would be great. You know, a couple of days, not hours on the market would be the perfect world. But,
honestly, like right now, people are like, why should we buy a house right now in this market?
Right.
And I tell them 4 things: incentives, buy downs,
right,
price negotiation, then price stability.
Right.
You don't have to go in paying $60,000 over appraisal price like in 21.
Right.
You know, I wonder how those sellers are feeling right now with all that extra they've paid.
Right. Because a lot of what I told my buyers, especially, you know, those that were, they were scraping pennies to get to the table anyway. I'm like, you know, this is not the time. And, you know, not everybody agreed with what I said, and that's okay. I'm not here to please everybody. But I just told them, I said, if you can hang on to with a more stable market, you're not overpaying for a house or being house poor time you get the keys. Because that's a lot of what was happening. And so that's the other reason to buy right now, too. I totally agree with you. So how did you get into the mortgage business?
So backstory, I got into the mortgage business in 2015, and I'm actually a second-generation mortgage lender.
Oh,
nice. So my mom's been a lender for over 30 years and initially just begged me to get started. I was a stay-at-home mom and was happy with that, but wanted something to do on the side. So I got licensed strictly to help with first-time home buyers and down payment assistance. Yeah. And then just absolutely loved it. And
then became the VA guru.
I moved to Lexington. We started our branch here.
Right.
And so now I run all of our Midlands operations. And
nice.
Yeah.
I know that we're going to get back together and go through some of your programs. And the VA, I know, is a big one because you are the VA guru around here anyway. But you talked about the 2-1 and then the VA. So what are some of the other, I would say, hot programs right now?
Yes. So one of the hot programs that I'm using a lot lately is called Palmetto Home Advantage. And that's a program where it's not necessarily, you don't have to have down payment assistance, but you can get a lower rate than market depending on where your credit is. Income up to $124,000. It's conventional, FHA, VA, USDA, whatever you want, but it's strictly for the rate. So that's a nice incentive. Some other programs that are really hot right now is any program that allows a 2-1 buy down. Yeah. I mean, if we're being honest.
Yeah, absolutely.
And then I just got my hands on 100% FHA where they're able to finance that 3.5% as a second.
Oh, that's nice. Yeah. Yeah, well, I know we're going to get back together and talk about all of that, all of those separately. And as what, you know, kind of buyers need to look for this day and what they need to be prepared for, because it has changed since the unicorn years.
Yes.
Drastically, I would say.
And that's exactly right. The unicorn years. Yeah. Like, if buyers would understand that is not going to happen again in their lifetime. No. So when you're just sitting on the sidelines, you're losing the equity that's already building in those homes.
That's right. Yeah, because those were unicorn years. There's, I coined that. I grabbed that phrase from someone else, and now I say it all the time because it sums it up best.
It does. I'm going to use it now.
Yeah, I was going to say use it because it's great. It is the term. Well, thank you so much for again letting me invade your beautiful office, and I know I'll see you soon. We'll talk about those individual programs.
That sounds like a plan.
All right,
thanks for having me.
Yeah, Ashton Mitchell, home loan girl here in Lexington, right on Main Street. Come see her.
Brought to you by Ashton Mitchell at Premier Nationwide Lending, where dreams are defined. And by HomeMattersSC.com, building on what matters to you.